Hey guys, welcome back to this channel. In today's video, we're going to talk about, I guess, what our 2 cents would be.
Yeah,
if we have
our opinion that we saw on some Facebook groups question, more like normal people question or family question about saving or investment that catch our eyes.
Yeah. So there was a quick. I guess we went. There's a Facebook group or so, and with the common questions, and we just answer it based on our own opinion.
Yes.
Okay. So on this particular question, now in Australia at the current stage during the pandemic, you are entitled to get superannuation out up to $10,000. Sorry, $10,000.
10,000 was last financial year, and then another one for 10,000.
That's.
I think
what is it?
Is 2020.
19 to 20.
2019. Yep, and 2021.
Year.
Yeah,
so
the
financial year. So here's I guess one of the question. I withdrew my super due to COVID. Understandable, everyone's circumstances are a little bit different. What will be the best way financially for my super fund balance to put it back once employed? Is it one lump sum or smaller lump sum or a direct debit payment setup? So how would you answer that?
One lump sum if you have the money, because super is calculated by what's that, compound interest.
Compound interest. Yep.
The earlier, the bigger amount you put it in, the faster you will get your money back, or even bigger.
Yeah.
But only if you have the money. If you don't have it, just try to put as much as you can, like more early, the earliest possible, because you're going to chase the interest back or the accumulated money.
Yeah, so if, like, for example, at the current stage with our mortgage, we did a deferred repayment for up to 6 months. But when you actually physically calculate it, like how much is that, because the interest is actually capitalized on your loan. Yeah. If you don't pay that back straight away, your repayment's going to get higher. So that's one side. And the other side is investment-wise, if the earlier you start, the better it is for you. The bigger the lump sum, the better it is for you. Now, obviously subject to individual finances. If you can, then that would be the best way. Because what we're going to do with our investment property is, like, as soon as that deferred payment finish, we're going to pay that lump sum
back in.
Yeah, whatever the deferred interest.
Yeah, because we have the cash. We just don't want to, because we just didn't want the COVID and chew up all our cash.
Correct. Yeah.
That's why we just hold it. Yes, let the bank get some interest first, but at least we know that we have the cash. We don't have to take out any money or using credit card. So we just keep it aside, and once it's done, we'll put as much as we can. So
just because you're getting that a deferred repayment or the interest deferred in a holiday, don't think it's a holiday. So when it comes to your super as well, just because you can take it out, I would suggest put it back as quickly as possible and more. So
yep. Yeah, that's it.
So if you take out $10,000, then I would put down that $10,000 back as quickly when you get a job back, and if not more than that.
Yes, because you're losing your time during that. You took out the money, and you got less money to accumulate it or earn interest. So it worked harder for you to get the money back.
So
hope it makes sense.
Next questions.
My partner and I are wanting to set up a joint house deposit account. Just wondering what banks people suggest. Also, is there accounts where we would both need to sign or agree on before a withdrawal?
So how did we do it? So we did it, we've got a joint account. It was...
it's like when we first started.
When we first started
dating.
So which bank do we we don't recommend? More like, it's just that we preferred Bank West because everything is online. We don't need to go to the branch.
And there's no monthly fee. Don't ever get any bank that
they charge you monthly fee, and then they charge you like, oh, you have to minimum deposit X amount of dollars.
Yeah, that's annoying.
Yeah, the annoying bit is that
well, minimum deposit that actually encourage you.
Yeah.
I don't know, depends on.
Depending which account, but what we had is like it's a free zero transaction fee, but minimum is you have to sunk in about $2,000 deposit in there.
I can't remember.
Or something. I think it was about 2,000.
No, there's no limit for that. That long ago, I don't know. Really long time.
So yeah, check whichever bank, but we use Bank West because everything's online and we don't need to go to a branch. That
time we went to the branch because it's like 7 or 8 years ago. I don't know now,
but
because
now,
we don't have a joint account anymore.
Well, we cancel it. Everything.
Yeah, we blend it together. Anyway, so just open some joint account. You don't have to pay monthly fee.
The main part is that the fees. Make sure it's zero.
Yeah.
Whether withdrawal or deposit, make sure it's zero.
Or maybe even some bank, because they're looking for a house deposit account. Maybe open some with high interest rate. We did that. That's nothing really low. Anyway, currently the interest we're using Macquarie.
We're using Macquarie Bank and Upbank. Upbank or Ubank?
Ubank. There's no Upbank. It's Me Bank or Ubank.
Me Bank, Upbank. The amount of banks out there.
Anyway, we use Macquarie because they're having this promotion. I forgot 2.1, 1.6. I can't remember, but
there's a bonus.
Only 4 months.
Yeah, there's a bonus if you save it in there for 4 months. The interest is kind of high. I'll see if I can find it somewhere and post it somewhere in here or maybe on the link below.
So we're having this cash in our hand.
And you earn an interest.
Yeah.
Like a massive
so
amount of
first
interest.
4 months, my name. After 4 months, his name. I'll see after that 4 months if we can do joint name. I'm not too sure. We'll try if they allow us to do it. Anyway, the second part of the question is where we would both need to sign or agree. So it seems like they want to both agree on something. We didn't. We didn't
because we were trustworthy enough. Like, okay, then you put this amount, I'll put this amount, and then we know where all of that money is going to. And I think we check it in a regular basis that we kind of don't need to.
We don't use that for expenses. That one.
Literally just going in. And then when we, in the beginning it was like, oh yeah, $100 from you, $100 from me, just to test the waters, making sure that, hey, is this the right thing to do? But when you become really serious, we ended up just go cut it. Okay, then my income would be for the expenses, for the like everyday items, and then your income, because your income was a lot more higher, it goes straight to the saving account just for the property. That was back when we both worked.
But the bank did ask us, would you like only one people to sign to withdraw money or both to sign? They do have the option to do so.
I mean, these days, like now, the way we do it is like, okay, then you hold the physical card. I have it on my phone. So it's like every time you spend something, I can see that transaction on my phone anyway. I mean, if I have to queries about it, I can ask you. Likewise, the other way around. Every time I spend money on my phone, she can access it on their net banking. So
you can see every single transaction that you use.
You know what I mean?
Unless cash.
Unless it's cash. So I mean, that's how we do it personally. I don't know how other people do it out there. So hopefully that helps. The next questions. Bear with me. Oh, wrong one. This is kind of interesting.
I think it's really common. This question.
Yeah, this is the reason why. This is why the reason why I'll put it down like as a screenshot. That way.
Anyway, question.
A lot of people. Okay, I'm trying to save for a home deposit. Do I save or pay off my credit cards first? Which one would you go first? Personally, I'll go first.
Okay.
Pay my credit card first.
Reason?
The less credit card product out there, like if you have multiple credit cards, if you shut them all down, the higher your borrowing power is going to be. One. Number two is less repayment on other store credit or credit card, the easier it is for you to manage. So instead of you just going, oh, okay, if you earn, let's say $1, maybe $1,000 a week or something, you don't have to allocate X amount of dollars for your credit card, X amount of dollars for this one, that one, that one, that one. You know for sure this is my money. Okay.
So your reason is based on simplicity.
Simplicity.
But my reason, I choose pay off credit card as well. But my reason is logically and mathematically.
Again.
Okay, my reason.
Go on. Yep.
Paying credit card first, because you paying credit card 20% a year.
Yeah,
that's true. You save your money 2% a year. You choose. You choose. Of course, you pay off your credit card first. So you save. No matter how hard you save, you can never pay off your credit card, because the snowball effect of paying 20% a year is going faster than you save your money on 2%.
Yeah, okay, that makes sense.
Yeah, that's the common sense.
Say in a different way. So if you have $1,000 outstanding balance on your credit card, so that means you'll be paying 20%. So that makes it about $20.
Yeah,
$1,000. So $20 goes towards the interest. Let's say if you don't pay any of the principal, that's just the interest component. You're paying $20 to the bank. Versus if you're going to save home deposit, you're only going to get about 2%, which is about...
No. 1,000 of 20% is $200.
$200.
1,000 of 2% is $20. So your interest to the credit card is $200, but the interest that you save up for that 1,000 is only $20. $20. So that's $180 different that you wasted on interest.
Yeah, that makes sense. When you look at it that way.
Pay off credit card, please.
Pay off credit card. Any credit card, like
any debt, pay it off first before you save.
Car loan, personal loan, credit card,
student loan.
Well, student loan,
I'm
depending.
not too sure in Australia, HEX.
Yeah, HEX. I don't know how it works because we don't have any HEX here. But yeah, try to minimize all of those debt before getting a home loan, because with a home loan, like they always ask. When we got our home loan, they always ask us, have you got any other credit cards? And when I asked the mortgage brokers, it goes, why do you ask these questions? The less credit card you have, the higher your borrowing power going to be. So so I think it was like they calculated, I don't know what the numbers are, but for every dollar that you owe on a credit card, or a credit card that have a balance of, let's say, $10 that you can spend, that would reduce your borrowing capacity by $10 or something for every dollar equivalent. I don't know.
Well, we apply our mortgage, and our brokers just told us,
shut it.
Yeah, just leave one that you really use it, because that's how the bank calculate. If you want to save deposit first, pay off any debt. Second, save as much as you can. Have side hustles, get your money work for you. Investment. Once it's done, here you go, your home deposit.
There you go.
And then you trap with the bank for 30 years. Here you go. Who's happy at the bank?
And obviously in that 30-year mortgage, this is a long one, so we'll save that for the next video. So, okay, here we go.
So, I have...
I'll make this bigger.
Okay. It's okay, I can see it.
Okay.
So I have got to the part that said you should get rid of your credit card. Again, credit card.
Credit card, yeah.
I don't have anything owing at the moment, but I am scared to get rid of it in this uncertain economic climate. So recently, during this pandemic, have you got rid of yours, or did you just lower your credit limit, change it to lower interest?
Well, we never paid any interest on our credit card. We haven't paid a single interest.
Can you change it to lower interest for your bank? Or maybe she's thinking about different card.
Different bank, yeah.
Different bank or different card.
Yeah. So what would I do?
We did get rid of cards.
Lots of cards.
Yeah. Because at one point we joined this financial course, and the guy keeps saying, just apply as many
cards as
you can, because it's for emergency.
Personally, no.
No.
The less cards you have, the better it is, I say. The less credit cards.
Because you are the one controlling your money. It's not the credit card or the money controlling you. That's why we get rid a lot of them. Yeah. And we only literally we only have one credit card, and the rest are debit.
Yeah.
Or debit card. If you don't have the money, don't have
spend
a credit card.
Yeah. If we don't have the money, like if we can't pay in full right now, then I don't know.
I think these days people just using credit card as like relying on credit card as an emergency.
Yeah, which is kind of bad in a sense. Like
it's bad.
Yeah, you should have like enough saving on the side, not relying on credit card as your in case of emergency. I would rather have money saved up in emergency in case of emergency.
Correct.
So,
we did get rid. We don't care about interest because they charge interest and we don't pay. We pay it off every month anyway. But if you have bad habit, then
change
just
your habit.
just cancel it.
Cancel it. I mean, yeah, definitely.
Cancel
the
it.
less credit card.
Yeah, if you have this habit, online shopping or afterpay or credit card, just cancel it.
Yeah.
Don't do it.
It might be hard for some, but from experience, the less of those stuff that you have, the better it is for you.
Yeah, but if like the person asking the question, yes, this situation, like this current economic situation is really uncertain. For me, I'll say have a debit card, use that first. If anything happen, last draw, maybe keep it, right? Use it as emergency if you have to.
If you really have to, then I'll keep it, or maybe lower. Like if you're a bit hesitant, like, oh, should I lower the credit card limit? Then do it.
Yeah.
I mean, because that would sort of like enticing you. Oh, okay, I've only got this amount of limit. I shouldn't spend it.
Correct.
You're bound to spend it a lot more wisely if you have less credit availability. Let's say.
Yeah.
So I mean, we do that. I mean, even though we have like quite big limit, we got given like massive amount during our first mortgage when they asked us, oh, do you want a credit card? Oh, how much can we actually get? We got given like, I don't know, ridiculous, like 60 or 70 grand or something credit limit.
I don't know.
Something ridiculous.
Something 40 or 50.
Yeah.
Anyway, and then we asked them, change it to 10.
Yeah, maximum 10.
That's it.
We're not gonna. Because what I'm scared is like with the $50,000 credit limit, I'm like, oh my god, you're gonna go out there and
buy a car.
buy something, yeah.
Yeah. So we lower it to 10, and we never ever have it more than.
That's 10 combined.
3, yeah.
So
never spend more than 3 per month.
Only one time we went up to 5 grand, but that was just because of a family member emergency when we were in New Zealand. But that was out of the ordinary. But every month we only spend
2 or 3.
2, 3.
Yeah.
And that 10 is just, so combined is like 5 grand you, 5 grand me.
Yep.
So anyway, so yeah, that's our 2 cents today. So as previously mentioned, we're not financial advisor. We're just pretty much giving you our 2 cents, what we do, what we thought, and how we do things with our family. Yeah, what we do in a certain scenario. Hopefully this helped you guys. Don't forget to subscribe, comment. See you guys in the next video.
Bye.
Bye.